Look, I need to tell you something that most precious metals dealers won't admit, and it's costing people thousands of dollars when they go to sell. I'm talking about the difference between silver rounds and silver coins, and why this distinction could be the difference between protecting your wealth and watching it evaporate when you need it most. Here's what happened last week. A guy walks into a coin shop in Phoenix with a bag full of silver rounds. Beautiful pieces, 1 ounce each, 0.999 fine silver. He paid $32 per ounce for them 2 years ago. The spot price of silver that day was $31.50. He's thinking he's about to break even, maybe make a small profit. The dealer looks at his rounds, weighs them, tests them, and offers him $28 per ounce. The guy's confused. He asks why he's getting less than spot price when his silver is legitimate. The dealer explains that rounds require additional verification. They're harder to move, and there's always that question mark hanging over privately minted silver. The guy walks out with $3.50 less per ounce than he expected. On 200 ounces, that's $700 gone. Just vanished because of a decision he made 2 years earlier without understanding the implications. Now contrast that with what happened the same day at the same shop. A woman brings in a tube of American silver eagles. Same weight, same purity, same silver content. The dealer offers her $34 per ounce, $2.50 over spot. She walks out with an extra $500 compared to what she paid. Why? Because those coins are government-issued legal tender with a face value. They're instantly recognizable. They're universally trusted. They require minimal verification. And there's a premium market for them that exists regardless of what spot price is doing. This is the reality that nobody talks about when you're buying. Everyone's focused on getting the cheapest silver per ounce. And I get it. When you're looking at a round for $29 and an eagle for $34, that $5 difference feels significant. You're thinking you're getting more silver for your money. You're thinking silver is silver. But here's what you're not calculating: the exit strategy. Because at some point, you're going to need to convert that silver back into currency. And that's when the true cost reveals itself. Let me take you back to March 2020. Remember that? The world's shutting down, stock market's in free fall, people are panicking. And suddenly everyone wants physical silver. Dealers are getting cleaned out, premiums are skyrocketing. But here's what was fascinating. The premium gap between rounds and coins didn't just widen, it exploded. American silver eagles that normally carried a $3 premium were selling for $8 to $10 over spot. Canadian maple leafs were right behind them. But generic rounds? They were barely moving. Some dealers stopped buying them altogether because they couldn't verify authenticity quickly enough, and they didn't want to get stuck with counterfeits during a crisis. Think about what that means. In the moment when you most need liquidity, when you most need to convert your silver into cash, the rounds become the hardest to sell, and the coins become the most valuable. It's the exact opposite of what you want. You bought the rounds thinking you were being smart and efficient with your capital, but you actually bought the least liquid form of silver at the worst possible premium structure for selling. Now let's talk about what's actually happening in the silver market right now, because this liquidity issue is about to become a lot more important. Silver's sitting at around $31 per ounce as I'm recording this. That's up from $18 just 4 years ago. But here's what most people don't understand. Silver's not moving because of investment demand. It's moving because of industrial demand that's about to go parabolic. Every electric vehicle requires between 25 and 50 grams of silver. That's roughly 1 to 2 ounces per car. Global EV production is projected to hit 30 million vehicles by 2030. That's 30 to 60 million ounces of silver per year just for EVs, and that's a conservative estimate. Then you've got solar panels. Each solar panel requires about 20 grams of silver. Solar installations are exploding globally. China alone is installing more solar capacity than the rest of the world combined. We're talking about hundreds of millions of ounces of annual silver demand just from solar. But here's the kicker. Silver supply isn't growing. In fact, it's contracting. Primary silver mines are becoming harder to find and more expensive to operate. Most silver comes as a byproduct of copper, lead, and zinc mining. When those base metal prices drop, silver production drops with them. We're looking at a structural supply deficit that's been building for years and is about to hit critical mass. The Silver Institute projects will see a supply deficit of over 200 million ounces this year. That's the 6th consecutive year of deficits. Where's that silver coming from? Above-ground stockpiles. recycling. And here's the important part: investor selling. When industrial users need silver and can't get it from mines, they turn to the secondary market. They're buying from dealers, and dealers are buying from people like you and me. This is where the round versus coin distinction becomes critical. When a major industrial user or their procurement agent needs silver, they're not buying generic rounds from unknown mints. They're buying recognized, verified, government-issued coins that can be quickly authenticated and melted. They're paying premiums for that certainty. And those premiums are flowing back through the supply chain to the people who own the right kind of silver. Let me give you a specific example. In 2011, when silver hit $49 per ounce, the premium on American Silver Eagles went to $6 over spot at retail. But the buyback premium, what dealers were paying to acquire them, went to $3 over spot. Meanwhile, generic rounds were being bought back at $2 under spot. That's a $5 per ounce difference in what you actually received. On a monster box of 500 ounces, that's $2,500. That's not a rounding error. That's real money. Now here's what's even more interesting. That premium structure has become permanent. Even when silver dropped back to $15 per ounce in 2015, Eagles maintained a $2 to $3 premium. Rounds went back to being sold at spot or slightly under. The market had fundamentally repriced the liquidity and trust value of government coins versus private rounds. And it's not just American Eagles. Canadian Maple Leafs carry similar premiums. Austrian Philharmonics, British Britannias, Australian Kangaroos. Any government-issued silver coin with a face value and a recognized mint behind it trades at a premium to generic rounds. Why? Because when you go to sell, the buyer knows exactly what they're getting. There's no question about purity. No question about weight. No question about authenticity. The government's reputation is behind that coin. Compare that to a round from a private mint. Even if it's a well-known mint like Sunshine or Scottsdale, there's still that extra verification step. The dealer has to test it. They have to weigh it. They have to check for counterfeits. And in a fast-moving market, that friction costs money. So they discount it. But here's where it gets really problematic. Counterfeit silver rounds are everywhere. I'm not exaggerating. China's been flooding the market with fake silver rounds for years. They're getting better and better at it. Some of these counterfeits will pass a magnet test. They'll pass a ping test. They'll even pass a basic acid test. The only way to know for sure is to cut them open or use expensive XRF testing equipment. Most small dealers don't have that equipment. So they either refuse to buy rounds from unknown sources or they heavily discount them to account for the risk. Government coins are much harder to counterfeit convincingly. The security features are more sophisticated. The dies are more complex. The quality control is higher. And there's actual legal consequences for counterfeiting government currency. That's why you rarely see fake American Silver Eagles that can fool an experienced dealer. They exist, but they're uncommon. Fake rounds? They're everywhere. So when you buy rounds thinking you're saving money, you're actually taking on counterfeiting risk that you'll have to overcome when you sell. And that risk has a cost. That cost is the discount you'll receive at sale time. Now, I know what some of you are thinking. You're thinking, but I'm buying from a reputable dealer. I know my silver is real. I'll just sell it back to the same dealer. And that's fine if that dealer is still in business when you need to sell. If they're still offering competitive prices. If you're not in a hurry. But what if you need to sell quickly? What if you're traveling and need to liquidate? What if that dealer went out of business? What if you inherited silver rounds and you don't know where they came from? This is where government coins give you optionality. You can sell them anywhere. Any coin shop in America will buy American Silver Eagles. Most will buy Canadian Maple Leafs and other major government coins. They'll test them quickly, verify authenticity, and make you an offer on the spot. With rounds, you're going to get more questions, more testing, more skepticism, and ultimately, a lower offer. Let me tell you about another scenario that's becoming more common. Estate sales. Someone passes away and leaves their kids a collection of silver. The kids don't know anything about precious metals. They just want to convert it to cash and split it up. They take it to a dealer. If it's all government coins, the process is straightforward. The dealer can quickly verify and make an offer. If it's a mix of rounds from various private mints, some of which might not even be in business anymore, the dealer's going to be much more cautious. They might refuse to buy some of it. They might heavily discount all of it. The heirs walk away with less money because of decisions made years earlier. And here's something else to consider: taxes. Now, I'm not a tax advisor, so consult with your own professional on this. But there's an interesting distinction in how the IRS treats different forms of silver. Government-issued coins with a face value are technically legal tender. They have a nominal currency value. Rounds are just bullion. They're commodities. In certain situations, that distinction can matter for tax treatment, estate planning, and reporting requirements. Again, talk to a tax professional about your specific situation. But it's another layer of complexity that rounds introduce versus coins. Let's talk about storage and insurance for a minute. If you're keeping your silver at home, your homeowner's insurance probably has limits on precious metals coverage. But some policies treat government-issued coins differently than generic bullion. Some will insure coins at a higher limit, or with better terms because they're considered collectibles or legal tender. Rounds are just bullion, which might have lower coverage limits. If you're using a third-party storage facility, they might charge different rates for coins versus rounds based on their insurance costs and verification requirements. Now, here's where this gets really interesting for the current market environment. We're seeing something unprecedented happening with silver right now. The disconnect between paper silver and physical silver is widening. You can buy silver futures contracts on the COMEX for spot price plus a small premium. But try to take delivery of that silver, and suddenly you're looking at massive premiums and long wait times. The paper market says silver is $31. The physical market says it's $35 to $38, depending on what form you want. This disconnect is telling us something important. There's not enough physical silver to meet demand at current prices. The paper market is suppressing the price through massive short positions, but the physical market is saying, we don't care what your paper contracts say. This is what real silver costs. And within that physical market, there's a hierarchy. Coins are at the top. Bars are in the middle. Rounds are at the bottom. The market is telling you what it values most when supply is tight. Quick aside here, because this is relevant if you're thinking about your retirement accounts. If you're sitting on $100,000 or more in a traditional IRA or 401k, you might want to look into how gold and silver IRAs work. I put together a free guide that covers the process, the rules, the tax implications, all of that. It's in the description below. Basically, you can get physical precious metals into a retirement account without triggering taxes or penalties if you do it right. And here's the key point. Most gold and silver IRA custodians only accept government-issued coins. They won't take rounds. So if you're thinking about precious metals for retirement protection, you're going to need coins anyway. Worth checking out if that's relevant to your situation. Anyway, back to this supply situation. Because what's happening right now is setting up a scenario where the round versus coin distinction is going to matter more than ever. We're heading into a period where physical silver is going to be increasingly hard to source. Industrial demand is growing. Investment demand is growing. Supply is constrained. And when that happens, the market starts discriminating much more heavily between different forms of silver. Think about it like this. Imagine there's a shortage of gasoline. Not every gas station is going to run out at the same time. The stations with the best supply contracts, the best relationships with distributors, the best logistics, they'll keep getting fuel. The marginal stations will run dry first. Same thing with silver. When supply gets tight, the most liquid, most trusted, most recognizable forms of silver will continue to trade actively. The marginal forms, the ones that require extra verification, the ones that carry counterfeiting risk, those will become harder to buy and sell. We saw this in 2020. We saw it in 2011. We're going to see it again, probably soon, and probably more severely. Because the structural supply deficit is worse now than it's ever been. Industrial demand is higher than it's ever been. And the amount of above-ground silver available for investment is lower than it's been in decades. Here's another angle on this. International markets. American silver eagles are recognized globally. You can sell them in Europe, Asia, Australia, anywhere. Canadian maple leafs, same thing. British Britannias, Austrian Philharmonics. These are global currencies in the precious metals world. But a round from a private American mint? Try selling that in Germany or Japan. You're going to have a much harder time. The buyer doesn't know that mint. They don't trust it. They're going to discount it heavily or refuse it entirely. This matters because we're moving into a more fragmented global financial system. Currency controls are increasing. Capital flows are being restricted. The ability to move wealth across borders is becoming more important and more difficult. Physical precious metals are one of the few ways to do that, but only if you have the right kind. Government-issued coins are universally recognized and accepted. Rounds are not. Let me give you a historical example. In the 1970s, when Americans were finally allowed to own gold again after the 1933 confiscation, there was a massive premium on American gold eagles and other government coins versus generic gold bars. Why? Because people trusted the government mint more than private refiners. They knew the weight and purity were guaranteed. They knew they could sell those coins anywhere. The premium on eagles versus generic gold was often 10% or more. That premium has persisted for 50 years. It's not going away. The same dynamic exists with silver. Now let's talk about what happens if silver really takes off. And I mean really takes off, like $100 per ounce or higher. Some analysts are predicting that based on the supply-demand fundamentals. If that happens, the premium structure is going to get wild. Because at $100 silver, a $5 premium is only 5%. That's nothing. Dealers will happily pay $5 over spot for eagles because they can turn around and sell them for $8 or $10 over spot. But rounds? The premium might stay flat or even compress, because the counterfeiting risk doesn't change with price. The verification cost doesn't change. The liquidity concerns don't change. So on a percentage basis, rounds become even less attractive relative to coins as the price rises. Here's something else that's not widely discussed: the collectible premium. Some government silver coins develop numismatic value beyond their silver content. Early year American silver eagles, low mintage years, special editions. These can trade at significant premiums to spot silver. A 1986 American silver eagle in perfect condition can sell for $100 or more, even when silver is at $30. That's a $70 numismatic premium on top of the silver value. Rounds never develop that kind of collectible value. They're always worth their silver content and nothing more. Now, I'm not saying you should buy silver for numismatic value. That's a different game entirely. But it's a nice optionality to have. If you buy eagles and hold them for 20 years, there's a chance some of them develop collectible value. If you buy rounds and hold them for 20 years, they're still just rounds. They're still worth their silver content, minus a discount for verification and liquidity concerns. Let's talk about fractional silver for a minute, because this is another area where the round versus coin distinction matters. If you're buying silver for potential barter or emergency use, you want smaller denominations. 1-ounce coins or rounds are fine, but what if you need to buy something that costs a 1/4 ounce of silver? You can't cut a coin in half. Well, you can, but then you've destroyed its numismatic value and you're back to selling it as scrap. This is where government-issued fractional coins shine. 1/2-ounce coins, 1/4 ounce coins, 1/10-ounce coins. They're all legal tender. They're all instantly recognizable. They all trade at premiums to their silver content. But fractional rounds? They're much less common, much less liquid, and they trade at even higher premiums than full-ounce rounds because of the manufacturing cost per ounce. If you're building a silver position for emergency preparedness, you want a mix of 1-ounce government coins and fractional government coins. That gives you flexibility. That gives you liquidity at multiple price points. Rounds don't give you that same flexibility. Here's another consideration: gifting and inheritance. If you want to give silver to your kids or grandkids, what are you going to give them? A tube of American silver eagles is a meaningful gift. It's recognizable. It's prestigious. It's something they can hold on to and appreciate. A bag of generic rounds? It's just bullion. There's no story there. There's no connection to government mints and national heritage. It's just metal. Same thing with inheritance. If you're leaving silver to your heirs, you want to leave them something that's easy to value, easy to sell, and easy to divide. Government coins check all those boxes. Rounds create complications and questions. Now let's talk about the current premium structure and what it's telling us. As I'm recording this, American silver eagles are selling for about $37 to $38 at retail. That's $6 to $7 over spot. Generic rounds are selling for about $33 to $34. That's $2 to $3 over spot. So you're paying about $4 more per ounce for eagles versus rounds. But here's what matters: the buyback spread. Dealers are buying eagles for about $34 to $35. That's $3 to $4 over spot. They're buying rounds for about $30 to $31. That's $1 under spot to spot. So the real difference in liquidity value is $4 to $5 per ounce. That's the premium you're paying for instant liquidity and universal recognition. Is that worth it? Let's do the math. If you buy 100 ounces of Eagles at $37, you're spending $3,700. If you buy 100 ounces of rounds at $33, you're spending $3,300. You saved $400 up front. But when you go to sell, you're getting $3,400 to $3,500 for the Eagles and $3,000 to $3,100 for the rounds. The Eagles gave you back $300 to $400 more. You basically broke even on the premium, but you had much better liquidity and much less hassle selling. And that's in a normal market. In a stressed market, that spread widens dramatically. In 2020, Eagles were selling for $10 over spot and being bought back at $5 over spot. Rounds were selling for $4 over spot and being bought back at $2 under spot. That's a $7 per ounce difference in buyback value. On 100 ounces, that's $700. The premium you paid up front for Eagles was completely justified by the premium you received when selling. This is the calculation that most people don't make when they're buying. They're focused on the upfront cost per ounce. They're not thinking about the back-end liquidity value. They're not thinking about the verification hassle. They're not thinking about the counterfeiting risk. They're just thinking, I want the most silver for my money. But that's the wrong framework. You want the most liquid, most trusted, most universally accepted silver for your money. Because that's what's going to hold its value and be easiest to sell when you need to. Here's the bottom line. If you're buying silver as an investment, as a store of value, as insurance against currency debasement, you need to think about the exit strategy from day one. You need to think about who's going to buy it from you, what they're going to pay, and how easy the transaction is going to be. Government-issued silver coins give you the best possible exit strategy. They're universally recognized, universally trusted, and universally liquid. Rounds give you more silver per dollar up front, but less liquidity and less value when you sell. The premium you pay for coins isn't a cost. It's an investment in liquidity. It's an investment in trust. It's an investment in universal recognition. And in a world where physical silver is becoming increasingly scarce and increasingly valuable, that liquidity premium is going to matter more and more. So, if you're buying silver rounds instead of coins because you think you're being smart and efficient with your capital, you need to reconsider that strategy. You're not saving money. You're creating a future problem for yourself. You're buying the least liquid form of silver at a time when liquidity is going to matter most. Don't make that mistake. Buy government-issued coins, pay the premium, and sleep well knowing that when you need to sell, you're going to get top dollar with minimal hassle. That's the real value of silver. Not the metal itself, but the trust and liquidity that comes with the right form of that metal.